All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Monday, everybody. Today's April 7th, 2025. And the sell-off in stocks that started with the tariff announcement on Wednesday evening is continuing today. We are in day 3 of this market rout, and things are going global now. The Chinese have come back from their tomb sweeping holiday. Markets in Asia were closed for the last couple of days on Thursday and Friday. Boy, today opened sharply lower. Yesterday, the Hang Seng index dropping more than 13%. The Shenzhen dropping almost 9%. The Nikkei down 7%. I was hearing about trading in Nikkei futures was halted last night. Mayhem in global stocks. I don't think that is an overstatement. It's also in Europe, with European shares performing better than the Asian shares. But, we've got the DAX and the FTSE down 4 or 5% each. We've got the NASDAQ, the S&P, and the Dow are all opening several hundred points lower. Now, there's a little bit of a silver lining here. And when I say a little bit, I mean it's razor thin. We're looking at a much more modest decline at the open than we were facing last night. When I went to bed last night, Dow futures were down between 1,300 and 1,600 points. A more respectable 700-800 now. And guys, I haven't looked in like 30 seconds since I went live. So who knows? Maybe we're back down 1,000 here. Things are very, very volatile in stocks right now. Of note, something very important, the bond market not doing what it's supposed to right now. Maybe someone might jump down my throat of that. What the bond market is doing right now is not making a lot of sense to me. We're going to look at that. We're going to look at what's happening with yields and speculate on what might be going on there. That's worth watching, all right, because there was a very important event on Friday last week. Chair Powell had this speech that he gave at this Washington Post summit that was organized, and he was straight up asked, are you going to cut rates to stop this stock market rout? And his answer was no. He's not going to cut rates. And the market didn't like that. The market was hoping Jay Powell's like, oh, stocks are never allowed to go down. Stocks are only ever allowed to go up. We'll print money and buy bonds, inject liquidity to support asset prices forever so we can all be millionaires, right? Doesn't that sound great? Yeah, money, supply, inflation, that whole thing. So Powell said Friday he's not going to cut. Now, look, I am not in favor of Powell cutting. I don't want the cut. I spent the last couple of years just wishing the Fed would do nothing for a change. But I have to ask, why was it so urgent to cut rates in September by 50 basis points? And then now is not the time for action. Let me ask you, when do you think the market needed a rate cut more? Do you think it needed it in September more, or do you think it needs it now more? I don't think they should do either. But one must wonder, what has changed? Why would Powell move so hard and so sudden in September, poll numbers, and why would he not move now? The Fed's reputation as an apolitical institution, well, that's questionable at this point. Gold and silver are catching a breather this morning, though, doing all right. Silver's actually ripping this morning. Shout out to my buddy Bob Coleman from Idaho Armored Vaults, who came on the channel late Friday. I aired that interview with Bob on Saturday morning where we speculated silver might be setting up for a run here. Now, that doesn't mean there couldn't be more pain in store for precious metals here, guys, because I do think we are on the precipice of some kind of a liquidity event. And we saw it late last week. When you get a liquidity event, when somebody blows up, they don't sell what they want to sell. They sell anything and everything they can, up to and including their gold and silver holdings. So I'm encouraged to see this rally. I don't necessarily think that it's over here. And look, we have only scratched the surface here. The trade war, guys, it's 3 days old. There's a lot of people who are saying, oh, BTF and D, buy that dip. It doesn't matter. It's going to be over in a day. Global trade wars typically don't play out in a span of 3 to 5 business days. They tend to last a little longer than that. All right. And if you listen to the language coming out of the White House and the administration, they are committed. Now, maybe there's some kind of a rebellion in Congress among Republicans and they team up with Democrats and decide that they're going to yank back those executive powers to prevent the tariffs. It's entirely plausible. I think it's unlikely, but that could happen. But absent that, this trade war will not be over in single-digit days. I can tell you that. There are more companies. There are more countries that are coming to the negotiating table offering olive branches, but so far, no big major breakthroughs between the big players here. Now, we are seeing some movement, a lot of movement in the automotive space. We got a couple of articles we're going to look at this morning going on in cars. We have some luxury brands are out there saying we are going to pause our shipments to the United States until we get a good idea of what's going on in tariffs. And then we've got other makes and models that are saying, you know what, we're going to extend some employee discounts to everybody. There's been a little bit of a surge in car shopping recently, people trying to get out in front of these tariffs, buy their cars before the prices go up. And I had my buddy Tom from Car Concierge Plus on the channel 2 weeks ago, and we talked about car prices heading higher. A lot of people didn't see eye to eye with that assessment, but based on everything I've seen since this trade war started, it looks like that is indeed what is going to play out here. On top of that, we've got a company like a Nintendo Switch is out there saying we are going to cancel pre-orders. They're not canceling, they're delaying pre-orders for the Nintendo Switch 2. Because they don't know what to charge. Maybe there's a little hopium here. Maybe everybody's putting their plans on hold. Just kind of like, yeah, you know what? Maybe this whole thing blows over. You know, we'll head over to the Winchester, grab a pint, pick up Liz and Mom, wait for this whole thing to blow over. What movie? Let me know in the comments. I don't think it's going to blow over that fast. I think these temporary actions are desperate measures being taken by boardrooms, and it might delay the price increases that are coming, guys. Make no mistake, price increases are coming resulting from these tariffs. And last but not least, I lost my train of thought. The AI bubble. I have to talk about that because all this sell-off that we've seen in the last couple of days has nothing to do with, in my opinion, the real risk underlying this market, and that is this AI bubble. It's still out there, and they're still blowing like crazy. SoftBank is still borrowing money, and they're all still cutting round-tripping deals with NVIDIA and OpenAI and CoreWeave, and they're all just moving the same dollars around in circles, and they're doing it faster and faster to try to keep this bubble inflated. This massive drawdown that we've seen in tech stocks, this big crash that we've seen, I saw an estimate, something like $10 trillion of wealth has evaporated. Understand the AI bubble has not even begun to deflate yet. In my opinion, the top is in. I think the CoreWeave IPO probably signaled the top. You could argue the top was a few months before that. But based on the lackluster performance of the CoreWeave IPO, based on Microsoft canceling their data center projects, and then all of a sudden OpenAI scrambling to cut deals with CoreWeave and SoftBank's ridiculous $1 trillion announcement from a few days ago, these crooks, these grifters in Silicon Valley and their co-conspirators in Wall Street are blowing harder and harder into this bubble, and they're not able to keep it inflated. If the stampede to the exit starts, it will pull back the curtain on this bubble, and people will realize underlying all of it are AI startups, not a single one of which has ever turned a profit. And without the continuous flow of investment capital into that bubble, they can't afford to keep renting the GPUs. And if they can't afford to keep renting the GPUs, then there's no reason to build more data centers. And if there's no reason to build more data centers, then you don't need NVIDIA chips. That revelation has not yet set into this market. It's just starting to. But everything we're seeing right now is just tariff noise. So with all that, why don't we shrink my big melon of a head and let's see what's going on in these markets, guys. And it is rough out there once again this morning. But you know what? It could be a whole hell of a lot worse. Right now, the S&P 500, it's down 138 points, 2.7% lower. All right, that's a bad morning. That's really bad. Well, look where we were. I mean, we were a full 115 points lower at 3 a.m. Eastern time last night. So the market has clawed back close to half of its losses since the low point last night. Maybe that's a sign there's some dip buyers there. Maybe not. I don't really know what to make of that. But all things considered, it could be worse. And by the way, this is a great time to say, don't forget that like button and that subscribe button that's right next to it if you're new here, because we do this every morning. So come on back and have your coffee with the Melonheads tomorrow morning. Who knows what's going to be happening by then? The Dow, meanwhile, is down 982 points, 2.5% lower as well. At one point last night, the Dow was down over 1,600 points. That's after a 2,200-point drop on Friday. Still heading lower here. But again, well off the lows. The Dow also clawing back close to half of its lows since last night. So all things considered, U.S. stocks could be a lot worse here. NASDAQ, same deal, 2.5% lower, 443 points to the downside, clawing back those losses. At one point last night, we were off by about another 600. We were over 1,000 points down in the NASDAQ on those futures last night. So stocks are somewhat catching a little bit of a break here. And again, that silver lining, it's very thin, but it's out there. Look at me being an optimist. Who'd have thunk it? Who had Jack being an optimist on their 2020s bingo card? All right, now let's look around the world because things are pretty bad no matter where you look, all right? Let's look at the DAX here. That's the German exchange, down 864 points, 4.2% lower for the DAX. The FTSE 100, that's your London exchange, 325 points, 4% lower. What else? We got the French exchange down 3.85%. The IBEX, that's Spain, down 4.48%. All right, so European stocks down pretty much 4 to 5% across the board yesterday. Or as we speak, those are still trading here. Let's scroll down a little bit. Let's look in Asia here. The Nikkei 225, the big Japanese index, 7.8% lower for the Nikkei. Watch that yen carry trade. It still hasn't really started unwinding. I looked at the USD JPY chart. It's kind of stable this morning. So that yen carry trade unwind, it doesn't seem to be playing a major role yet. Emphasis yet, but it's still out there. The Shanghai exchange down 7.3%. The Shenzhen 9.6% lower. The Hang Seng, that's the big Hong Kong exchange. Look at this Hang Seng chart. 13.2% lower in one day on the Hang Seng. I mean, they came back from that tomb sweeping holiday. And look at the air gap here. Look at this big air gap down at the open. Absolutely brutal to start the day. Also important where they closed. They ended up closing pretty much sitting right on top of their 200-day moving average. Now, I did see an article in Reuters this morning that talked about how in the Chinese market, at least, the home team, if you will, the Chinese government buying desks were buying up shares like crazy to support stocks in China. I'm sure that served to put at least a little bit of a floor under those Hong Kong shares. Emphasis a little bit, guys, because there's not much of a wick to the bottom of that candle. Hong Kong just got absolutely brutalized last night. Now, looking over at the U.S. dollar, we're sitting here around 102.96. It's a little bit weaker today, pretty much unchanged here. Not a lot of movement in the dollar. We got to talk about the bond market, all right? Something is not right here in the bond market. We're looking at stocks in their third day of a major sell-off. You know, the Dow's set to open 800 points lower, 2.5% down across the board. But look at what these yields are doing. The long end of the yield curve, the yields are higher. That means bond prices are moving lower. That means people are selling bonds. Since when did people sell bonds in the middle of a stock market rout? This stinks, all right? Somebody's blowing up out there is what I'm afraid is going on here. And that's why these yields on the long end are actually higher, because we should be seeing a stampede into bonds right now. Everybody's out there selling stocks, and stocks are moving lower. We can see them selling. Where is that money going? A little bit's going into gold. We'll look at that in a minute. But whatever's going on, whatever is flowing, running to safety in the bond market, somebody's pulling out even more. So either some fund is out there blowing up, or maybe this is money going home. Maybe this is Japanese and Europeans trying to wage trade war against the United States by selling our debt. It's possible that's going on, but I'm willing to bet somebody out there is blowing up. We probably won't hear about it until after it's already happened, though. The 30-year Treasury, 4.498. That is higher by almost 11 basis points this morning. The 10-year, 4.057, almost 6.5 points higher. The 2-year, meanwhile, is a little bit lower here at 3.641. That's off by about 3 points. And the 1 month is at 4.308, down by 0.5 point. Again, long end of the yield curve moving higher in this scenario doesn't make a whole lot of sense to me. Also doesn't make a lot of sense to Luke Groman, whom I've come to respect his opinion very much. He's out here on Twitter saying 10-year yield just moved green. And he's quoting Obi-Wan here. I felt a great disturbance in the force, as if millions of voices suddenly cried out in terror and were suddenly silenced. I fear something terrible has happened. And I get the same vibes when I look at that 10-year Treasury, when I look at that 30-year moving higher by more than 10 points. I'm afraid somebody's out there blowing up. That U.S. Treasury basis trade where people buy cash bonds and then sell futures against it. Their net positioning is almost nothing. Picking up pennies in the steamroller. It's a modestly profitable trade during good times. but during bad times, they can blow up in your face. That's what ultimately forced the Fed to act in March of 2020. It's entirely plausible that that is going on again here. Now, look, this is being reported right now. There's this closed board meeting at the Fed going on today. You know, this is on the Fed's calendar, April 7th. Some people are out there reporting this as an emergency meeting, like the Fed is scrambling in the middle of the night to go cut rates or something like that. That's not what's going on. Yes, there is a closed board meeting of the Fed that's going on today. That's on the calendar. But one thing you'll notice if you scroll down to the bottom of the page, this was actually announced on April 3rd. This is not an emergency meeting. It hasn't been called at the last minute. They set this up a few days ago. Now, look, I'm sure there's going to be a certain amount of urgency going on at this Fed meeting. I'm sure they're going to be talking about tariffs and the possibility of rate cuts to support asset prices. But this is not the emergency meeting that it is being reported as in some circles out on FinTwit this morning. All right, let's look over at the bond market. Now, gold is kind of interesting here. We got spot gold is down by about $15, 0.5% lower, $3,022. All things considered, not doing too bad. The front month gold contract, though, up by about $6 here. So gold kind of making up its mind where it wants to go. Silver's having a hell of a morning here. Once again, shout out to my friend Bob Coleman from Idaho Armored Vaults, who had a lot of great things to say over the weekend about the trading here in metals. Spot silver's at $30.13. It's actually higher by 58 cents, almost 2% higher. Now, we talked about the gold to silver ratio in that interview with Bob Coleman on Saturday morning. The gold to silver ratio blew out to like 102 on Friday when silver just got bludgeoned. I mean, all metals were selling off on Friday, but silver in particular was selling out. And we talked in that interview, the gold to silver ratio never spends a lot of time above 100. So silver was due for a rally, getting a little bit of one here. We'll see if this one persists. Meanwhile, we've got copper is lower by another 2.7%. I tell you, copper has taken it on the chin over these last couple of days as well. And copper being a great barometer for the health of the economy, showing things not so healthy. We've got platinum and palladium are both modestly negative this morning, down a fraction of a percent. Even crude oil down again, 2.25% lower for WTI crude. $60.56 for May futures. Let's take a look at that oil chart here, guys. Boy, is this ugly. $60.52. Look at the breakdown. These are daily candles. Look at these last couple of days. Oil just dropping off a cliff here. Now, it's also important to note as we zoom out a little bit, let's zoom a lot of bit out. Let's go all the way back to about, say, 2021. And I'm just going to put a little bit of a horizontal line on this chart here just so we can see where we're at. Where are we right now? Right there. That's where oil's at. We have broken prior resistance or prior support from 2023. We have broken support from December of 2021. We broke that support from September of 2021, and we broke that support from May of 2021. Oil is putting in a new low here, guys. Look, while we're looking at consumer goods heading higher, car prices, we're going to talk about that in a second, probably heading higher. Consumer crap blenders, coffee makers, all those things that sit on the counter in your kitchen, all going to get more expensive. At the very least, we're looking at cheaper gas. All right, this is Jack being an optimist. Again, I'm trying really hard to dabble in optimism here. I'm turning over a new leaf, the New Year strategy, whatever you want to call it. At the very least, gas is going to be cheaper here, significantly cheaper. Also worth pointing out, guys, we still have that strategic petroleum reserve to refill. I wonder how much lower oil prices are going to go before we get some kind of an announcement from D.C. that they're going to support domestic oil production by refilling the SPR. I suspect we don't get something like that until oil prices are in the mid-40s. I think we've got a lot lower to go still here. But we're now taking out those lows from 2021. Oil prices heading lower in a hurry. Bitcoin also heading lower in a hurry. We had a big breakdown in Bitcoin. And guys, I've been watching this for a couple of weeks. We've been watching this playing around on the 200-day moving average for 2 or 3 weeks. You're probably sick of hearing me talk about it. And I was saying how ugly the technicals look, how we were looking at a breakdown. And you know what? Bitcoin on Friday actually traded pretty well relative to the rest of the market. Didn't make a lot of sense to me. And then wham, over the weekend, we lost that 80,000 threshold, falling off a cliff here. $77,091 is priced on Coinbase. off by another $1,200. It was a bad weekend for Bitcoin. Look, guys, we're probably in the midst of some kind of a liquidity event here. And when you get liquidity events, you sell anything and everything, including Bitcoin. And a lot of people are out on leverage buying Bitcoin, Michael Saylor. And, well, you don't want to be over-levered in an event like this. Also, this is pretty interesting. We got this one from the Kobayashi letter last night. Vanguard is out there telling people to remain calm. All is well. Don't sell your stocks. And this is pretty interesting. Vanguard emails clients asking them to resist the urge to deviate from their financial plan as markets fall sharply. Vanguard is asking clients not to take money out of the market. How's that for a sentiment check? And here's what they're saying over at Vanguard. Stay the course. We'll be right there with you. With the White House announcing new tariffs, the market has become volatile, testing the resolve of even the most disciplined investor. During uncertain times, resist the urge to deviate from your financial plan. The best and worst performing days of the stock market often occur in close succession, making it a difficult to time when to sell or buy. Look, guys, I'm just posting this not to advocate any one course of action, mainly just to communicate the sentiment out there. When you've got one of the biggest asset managers in the world, I think Vanguard is number 2, and they're telling everybody, calm down, please stop calling us, telling us to sell stocks. It's a good way to gauge how much negativity there is out there. And speaking of negativity, we got some from Dan Ives this morning. Tesla shares tumble after bullish analyst slashes price target by 43%. He's also cutting his target on Apple. 2 of the Mag 7 having their price targets cut here this morning. One of Wall Street's biggest fans of Tesla and Apple has cut his price targets for both stocks in the wake of recent developments. Wedbush securities analyst Dan Ives cut his price target for the Tesla stock by 43% from $550 to $315 due to tariffs and CEO Elon Musk's controversial cost-cutting role with the Trump administration. Shares of Tesla tumbled over 7% in pre-market trading on Monday. Tesla deliveries plunged in the first quarter and last weekend saw massive demonstrations at Tesla showrooms protesting Musk's actions. Tesla shares dropped about 15% on Thursday and Friday combined and have fallen more than 40% since the start of the year. Now, he's also talking about Apple here. Meanwhile, Ives lowered Apple's price target by 20% from $325 to $250, citing the fallout from tariffs. Trump's tariffs are a disaster for Apple due to its heavy China exposure, with 90% of iPhones made there. Unlike COVID disruptions, this isn't a temporary issue. The 54% China and 32% Taiwan tariffs would crush Apple's cost and hurt demand. I've said that he remained bullish on Apple in the long term. Well, Apple received tariffs exemptions in Trump's first term. Experts say it's less likely to get the relief this time around. He also said it's not realistic to expect Apple to move significant iPhone production to the U.S. from Asia. The reality is it would take 3 years and $30 billion in our estimation to move even 10% of its supply chain from Asia to the U.S., with major disruption in the process. He wrote, adding that the near-term margin impact on Apple's gross margins during this tariff war could be mind-boggling for the U.S. tech stalwart. Apple stock fell 4% in pre-market trading on Monday, and shares are down 25% this year. So let's look right now. We've got Tesla is down about another 6.9, almost 7% lower after falling 10.4% on Friday. Year to date, Tesla down 40%. Let's see if I can get this chart. Doesn't want to update. 40% lower year to date for Tesla. Guys, this thing's down like $600 billion in market cap in just a couple of months. Apple's not too far behind. This morning, they're down another 5% after falling 7.3% on Friday. And year to date, Apple is off by about 24%. A lot of Mag 7 market cap going up in smoke here. Now let's talk a little bit about autos, because we've had a lot of news in autos these last few days. Automakers provide stable pricing for now, but warn of future hikes. And they got Stellantis is up there. Automakers are offering deals to anxious customers to ride a short-term surge in shopping, while also warning lawmakers that they will have to raise prices dramatically if tariffs remain in place for long. Chrysler parent Stellantis said on Friday it would extend its employee discount program to the wider market on some new models, following a similar move from Ford, which was first reported by Reuters on Wednesday. So we got two of the big three domestic automakers are actually extending discounts to everybody, lowering prices in the short term. That's interesting there. U.S. President Trump's 25% tariff. Okay, yeah, we talked about all that. A temporary bright spot for dealers and automakers is a surge of vehicle purchases by tariff-weary shoppers. March sales actually increased on this uncertainty, and automakers are now looking to grab market share with a variety of incentives over the coming months. So that's one reaction. We got domestic automakers, maybe a little bit less subject to the tariffs. They're offering these employee discounts. Meanwhile, look at what's going on with some of the European automakers. British car maker Jaguar Land Rover pauses U.S. shipments over Trump's tariffs. British car maker Jaguar Land Rover said it will pause U.S. shipments for a month as it assesses the impact of U.S. President Donald Trump's tariffs on vehicle imports. It comes as disruption from the Trump administration's sweeping tariff rollout roils global stocks and sends shockwaves through the automotive industry. As we work to address the new trading terms with our business partners, we are enacting our planned short-term actions, including a shipment pause in April, as we develop our mid to longer-term plans, a spokesman for Jaguar Land Rover told CNBC via email on Sunday. So it looks like Jaguar Land Rover's just kind of like, well, we're going to wait a month. Hopefully this whole thing blows over, and that way we don't need to raise prices right away. In the meantime, that means fewer Jaguar Land Rovers coming into the U.S., less supply, same demand, price probably going to go higher for those models. Meanwhile, Stellantis and Ford are offering discounts. You can see how market share is probably going to be moving back toward some of those domestic manufacturers. And it's not just Jaguar Land Rover. Volkswagen Audi's holding cars in the U.S. ports due to auto tariff. Another foreign automaker pausing plans here. Volkswagen's Audi is holding its cars, which arrive after April 2nd, when Donald Trump announced a 25% tariff on auto imports in U.S. ports, it said on Monday, as companies scramble to work out how they will be affected by the duties. The Volkswagen brand has around 37,000 vehicles, sufficient for approximately 2 months of sales in its U.S. inventory, the spokesperson added. Audi is directly in the firing line of Trump's tariffs, with its best-selling U.S. model, the Q5, produced in Mexico, and its remaining models all coming from Europe or elsewhere. The brand sent a memo to dealers, first reported on by U.S. trade publication Automotive News, saying it would freeze shipments from April 2nd until further notice. Again, fewer cars coming in. Audi just kind of hoping this whole thing blows over. And, okay, we're just going to leave the cars at the port so we don't have to pay the tariffs and we don't have to raise our prices. But sooner or later, they're going to run out of cars at the dealership. They're going to have to move those cars from the port to the dealership, which means they're going to have to pay those tariffs, assuming no big deals aren't announced, which means those prices are eventually heading higher. So the auto industry is everything is in flux right now, if you will. There are deals that are out there. And once again, shout out to my buddy Tommy, who came on the channel 2 weeks ago. Nailed that call, brother. And another one, not automotive related, but a very similar story here. Nintendo delays Switch 2 pre-orders in the U.S. to assess impact of Trump's tariffs. Nintendo is delaying U.S. pre-orders of its highly anticipated Switch 2 console because of market uncertainty over President Trump's tariffs, the company said Friday. Nintendo's American depository receipts were down 3.2%. That's the American shares of Nintendo stock. Pre-orders were scheduled to be accepted on April 9th. There is no new date, according to a Nintendo spokesperson. In a statement, the spokesperson also said Nintendo will update timing at a later date. The launch of June 5th, 2025 is unchanged. So no changes to shipments here. This is just the pre-orders. They're not going to take pre-orders on the 9th. June 5th is still going to be the rollout date. So what does that mean? It means, again, they're just pausing their plans, hoping somebody cuts a deal, hoping the tariffs go away, because they can't take pre-orders. Then they lose their window to pass those tariffs on to the consumer. They don't want to raise their prices yet because maybe they cut a deal next week, in which case we will have lost market share for no reason. So everybody's just kind of holding here. You can see how this is going to start biting earnings, guys. Nintendo pausing pre-orders on their signature product, their new console. So you got automotive impact, you got gaming console impact, you got oil prices heading lower, gold is heading lower, silver's heading higher, stocks in Europe and Asia heading lower, dogs and cats living together. Mass hysteria. I love that line. And I just want to say thank you very much to Viv B, who gifted 5 Nobody Special Finance memberships. Thank you so much, Viv, for supporting the channel. I appreciate that very much. Oh my God, look at all you guys gifting these memberships. M&J with 20 Nobody Special Finance memberships. Thank you, M&J, as well as Viv. And T.A. Chapman is getting in on it too. 10 from T.A. Chapman. 35 new Melonheads. Welcome to the Melonheads, everybody. If you guys received one of those memberships, be sure and say thank you to Viv, M&J, and T.A. Chapman. Guys, thank you so much for all the support of the channel. I appreciate that very much. Mr. Ed Diaz, what's going on, Ed? He says, how come oil prices have dropped 10%, but gas prices haven't fallen? You notice how funny that is, right? Oh, something blew up in the Middle East. Before the shrapnel hits the ground, the prices at the pump have risen. But when oil prices fall, people say, well, it takes time for these margins to work their way through markets and inventory and hedging and prices in the futures happens. Look, they're not lowering the prices because they don't have to yet. They haven't been forced to. That's just one of those sad realities. The price hikes always get here faster than the price cuts do. That being said, gas will be heading lower. Although I have to add, you still have that bottleneck in U.S. refining capacity. So even though oil crude is heading lower, we still haven't built a refinery in this country in freaking forever. What, 50 years, 60 years since we built an oil refinery in this country because of NIMBYism? And so, we should be seeing a bigger impact in gasoline prices, but we won't because we still have that refining bottleneck. Maybe that's going to change with this trade war. Probably not. I don't think NIMBYism is really on the table at this point. But that is a very astute observation from Mr. Diaz there. Thank you, sir, for supporting the channel. And T.A. Chapman is back. He says, so what happens when tariffs hit the chips? Because holy shnikes, that is a fantastic point, T.A. Chapman. There was something of a stay of execution, if you will. Look, the tariffs didn't hit semiconductors yet. There was tariffs were placed on Taiwan, but they specifically exempted semiconductors from those tariffs. So we don't know yet. Let's assume 10%. That's still significant, right? One of these H100 GPUs, what do they cost? About $35,000. So, I mean, you're talking $3,500 right on the top of that thing. Yeah, you better believe that's going to hit these chip stocks, all right? Because already the Mag 7 companies are getting nervous about all the CapEx. We've had Microsoft. They haven't officially cut their CapEx, but they have delayed plans, canceled others for data centers, which means eventually they're going to announce lower CapEx. We had Google just cut that deal with CoreWeave last week, which in my opinion, this is just my opinion, means Google is not far behind Microsoft in announcing plans to cancel their own data centers. And they're renting from CoreWeave instead, which means they'll too be cutting their CapEx. Meta will never cut their CapEx. They're still spending $1 billion on the freaking metaverse. Whatever they're doing over there, just let them go do it as long as they do it over there. I don't care. But look, guys, the CapEx cuts are coming. We've overbuilt data centers, and now they're going to get more expensive because of the tariffs on the most important components in those data centers. You better believe that's going to take a big chunk out of this AI bubble. Absolutely, T.A. Chapman. Taiwan Semiconductor stock is already selling off ahead of this. You've got NVIDIA stock is back down around like $92 here. Still, we're talking like March of 2024 prices. NVIDIA has not unwound this bubble, not even close, not even half of it. A long way to fall here. And again, people are still proceeding with this illusion that AI is going to be this big, massive profit-generating machine. Newsflash, it won't. So that reality has not even begun to set in this market yet. Just goes to show you, dip buyer beware. That's all I would say. Thank you, T.A. Chapman, for supporting the channel. Dan Hedin, what's going on, brother? He says, most of the big threes, big money-making platforms and powertrains are built and assembled here in the U.S. The cheaper platforms will get hit. Okay, so it sounds like when we say platform, probably models of the vehicles. It looks like Tommy said something similar, that your more expensive models, your luxury brands tend to have your bigger profit margins. And so maybe they can absorb a little bit more of the tariffs, whereas your more baseline models, they're going to be more susceptible because the margins on those cars are a lot thinner. And apparently those baseline models are also one of the reasons why they're cheaper, is because they're made overseas. And so they're more susceptible to tariffs. All right. Thank you, Dan. Appreciate the super chat and the support of the channel. Dan works in the automotive industry, guys, so that is firsthand information. Appreciate that very much, Dan. And Steve Woitis says, what is happening with credit? Are lenders tightening loan and mortgage criteria? Yes, I do think that's happening. We have seen, I've heard the phrase blowout. I haven't looked that closely, but we're seeing consumer credit, not consumer credit, I'm sorry. We're seeing junk spreads start to rise. We're seeing the riskiest debt is starting to get more expensive to take out. That means the lenders are starting to get nervous. And I tell you, man, I don't know what's going on in that bond market this morning, but that really worries me to see yields moving higher, 10 basis points when the Dow is down 800 in the futures. Something's wrong in the bond market this morning. I don't know enough about bond market mechanics to point to a thing and say, that's it right there. All I can tell you is something doesn't smell right in bonds. And I do think junk credit probably has something to do with it. Somebody out there is blowing up. Some private equity fund or some hedge fund got caught offsides, and now they're getting liquidated. I don't know what it is per se. Oh, here we go. I got a text message from Mish. He says market puking at the open. So we're going to have to, all right, we're going to shrink my head here, Steve Woitis, as we talk about credits. Let's look at what's going on actually in the markets here. Let me bring up we'll bring up TradingView in the S&P. How about that? Let's see what the S&P is doing at the open. Let's set this to 1 minute candles just as soon as this thing decides it wants to start playing nice, and it doesn't want to. I guess I got too many windows open. Oh, it's showing me the Hang Seng for some reason. See, this is why I don't change my charts live on the air. We get this kind of junk going on. All right, we're going to have to go to Yahoo Finance since that doesn't want to cooperate. All right, the S&P at the open down 177. Not too bad at the open. It could be worse. Okay, well, 3.5%. So the market just dropped like another 1% right at the opening bell. It was down 2.5%. The Dow was down 2.5%. Now it's down 3%. So the Dow's along for the ride, but it's the NASDAQ that's really taking a dump here. The NASDAQ's now down 4.5%. So the NASDAQ just dropped 2% in a couple of minutes at the open there. That's what's really dragging things lower here. Look, the sell-off is hitting tech. Let's just see. I got to bring up the name. I got to bring up your NVIDIA stock here. Let's see. What are we at? Down 7.5%. Well, under 90. NVIDIA under 90. Okay. Yep. This sell-off's not done, guys. If you thought the dip buyers were going to come in this morning, well, they're taking the morning off. Maybe the dip buyers will have a go of it at lunch, as they've been apt to do over the last week or so. But for right now, looks like it's going to be another hell of a day. Thank you, Mish, for sending that message and for letting us know more pain is in store. Go figure. Trade wars are not over in 3 days. Amazing. Thanks again, Steve, for supporting the channel. Appreciate the super chat, brother. We're going to leave that NVIDIA chart up while we're doing this. James S. is saying Taiwan semiconductor chips have pricing power to pass on tariffs. Taiwan Semi doesn't really have the pricing power. NVIDIA does. NVIDIA's got the margins, right? Their margins have been coming down over the last few quarters, but they're still above 50%. So NVIDIA can eat the tariffs, but, and there's a big but, let's say NVIDIA does eat the tariffs, and now those 50% margins turn into 25% margins. What happens to NVIDIA's earnings? They go down. They go down a lot. That means NVIDIA stock probably goes down right along with it. So the ability to pass on that pricing power, let's assume it's a 25% tariff on semiconductors. Regardless of who eats that cost, that is going to be majorly disruptive to this data center build out. But that is a good point. The margins, really, it's NVIDIA's that got the margins more so than Taiwan Semi, though. I think they're more likely to eat it, if anyone. Thank you, James S., for supporting the channel. And thank you, Dan Hadeen says, trucks and big SUVs make the money. Okay, so those big F-150s, that's your moneymaker over at Ford. I agree with that. And thank you very much, Dan, for being a Melonhead member for 13 months. By the way, those trucks, man, you're talking about an $80,000 truck. You throw a 25% tariff on top of that, that's going to get really expensive. You guys remember when the F-150 was considered like the working man's truck or a poor man's truck? I mean, the average person can't afford that vehicle anymore. It's turned into like this luxury thing. It's like a Cadillac right now. It's just, this promise of cheap consumer crap has not worked. I don't know if we're doing this right. I don't know if this trade war is the right course of action. Probably not. It's going to be very painful for everybody, maybe more or less painful for this demographic versus that demographic. But this cheap consumer crap made in Asia in exchange for the U.S. manufacturing base has not been a good deal for Americans. 90% of us, that's true. Maybe 10% of us, the people who are on CNBC saying, this is insane. What are they doing? It's been very lucrative for them, not so much everybody else. Thanks again, Dan, for supporting the channel. And thank you to the Pasta Man who says, morning, Jack, and the Melon men and women. Good morning to everybody. Thank you so much, Pasta Man. Had a good time. I was talking to Pasta Man Friday night. Yeah, it's been a couple of weeks, guys. It's been crazy. Thank you so much, Pasta Man, for supporting the channel, for everything you do. Also for the information you send as well. I appreciate that. And for the good vibes this morning. So look, guys, it's going to be another one of those days. Market puking at the open. Keep an eye on lunchtime. Usually the dip buyers show up around 11:30. If this market decides to try to rally today, it'll be around that time. Otherwise, get comfy here. I'm not advocating a panic, but you know what? I'm not really sitting here losing money because I pulled most of my money out of U.S. stocks in 2022. And so, yes, I sat out the biggest rip your face off rally of the AI bubble, mostly because I didn't trust price discovery. I see everybody in Wall Street, their biggest focus is on avoiding price discovery. Well, they're getting a big dose of price discovery right now. So I don't know where this goes. I'm not going to tell you what to do with your money. I'll occasionally talk about what I do with mine. Best I can do, guys, is tell you what's going on in the market so you can make up your own mind. And when I see BS in the press, I will call it out, as I always do. Keep your heads, everybody. Wear a helmet. That's also important. I just want to say thank you so much, everyone, for the super chats, for the generosity. Also, thank you to my magnanimous melon heads on Patreon and YouTube. You guys rock. Appreciate everything you do for the channel. Links down below, should you feel so inclined. Don't forget that like button on the way out and the subscribe button for you new guys. Come on back tomorrow, same time. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.